We had a pretty impressive recovery in U.S. indices here today. Pretty strong breath. So across the board, buying in U.S. stocks. Just sort of curious on the backs of last week's significant selling. How are you all feeling about this market? You guys feeling bullish? You feeling bearish? Cautious and unsure? Let me know what you're seeing. Of course, I will let you all know what I am taking a look at as we dig into our Simple Trading State of the Markets for February 1st, 2021. I'm David Starr, Vice President of Quantitative Analysis here at Simpler Trading. And let me go ahead and bring up some charts and we will start taking a look at these markets. Now, my primary lens for looking at these things, which you'll know if you've spent some time with me at one of these sessions before or in any of our chat rooms, is Elliott wave analysis. It's not the only tool I use, but I find that it does a lot to help me stay on the right side of things. And the keys to Elliott wave analysis are identifying the difference between 5-wave moves and 3-wave moves. Sometimes it's easier than others, but they have a pretty distinctive appearance. And the move down from last week's all-time high in the S&P 500 appears to me to be a three-wave move. You can see we came down into this Wednesday low, got a good size bounce, enough to indicate that this initial leg down was likely over. And then after that bounce, another drop into Friday's low. And from there, pretty strong upside. So this looks like a 3-wave move. And the reason that matters to me, the reason I care about this, is that moves tend to have different appearance when they're in the direction of trend and when they're against the trend. And 3-wave moves are against the trend. And so in a market that's been heading up, well, since really since end of October, beginning of November for a leg up, right? They've been heading up since March of last year. They've been heading up since March of 2009. And while there's been some selling along the way, we are still in an uptrend until we're not. And in this case, right, seeing a counter trend move down, or what looks like a counter trend move down in that uptrend, suggests that we're not done to the upside. Now, that's always a good bet for a trend to continue. And so it's a safe bet here as well, with or without the structure of the move down. But it just adds to our reason to favor the upside. So my gut says we've got at least one more new all-time high in the S&P 500 before we see some selling, and very possibly more than that. Now, with all of that said, I also have some reasons for caution, both short term on whether we're going to head immediately up, and longer term. I was already cautious prior to this all-time high made just last week. And my reason for that has to do with those trend moves, those 5-wave moves, which we expect to see when markets are moving in the direction of trend. So down from last year's high made back last February, down into last March's low, you can see one of those very classic 5-wave moves to the downside. 1, 2, 3, 4, 5. And what's notable, one of the distinctive features of the 5-wave moves is that after you get a wave 1 down and a wave 2 bounce, we're not just trying to find anything where we can find ways to count 1, 2, 3, 4, 5. They have to have some specific features. Among them, wave 3 has to travel far enough that when we get a wave 4 bounce, it stays clear of the action in wave 1. That's exactly what we got here. And then a 5th wave down. And so one of the things that we're generally looking for, right, is relatively modest counter-trend moves with respect to the entirety of the move. So in this move down, right, if this is the entirety of the move, this bounce is relatively modest compared to all of it. These bounces in here, relatively modest. And you can see the same behavior in the move up from that March low. Right? So relatively modest pullback with respect to the entire move, right? Relatively modest pullbacks in here. Even this one, which felt large at the time, whether it was down into this September low or the one at the end of October, wherever the move down ended, big at the time, small compared to the overall advance. And so this move up not only should be a 5-wave move, because after a pullback, we're making new all-time highs again and again and again on the way up. So it's in the direction of trend, a 5-wave move. But also it has that appearance. Where I've had some concerns are the fact that maybe it could be near completion. That is, if the scenario shown here is right, 1, 2, this is wave 3, and then we finish a wave 4 pullback into the September or October lows, right? And then a 5th wave up. Once that 5th wave up is done, we could be ready for a pullback or something more like a reversal. Now, I don't know that this is the structure. And a lot of times we're not going to know until the move actually ends. But there are ways that we can make use of the structure or what we know about these 5s and 3s, even without knowing every single part of the pattern. But this portion, pretty much since early to mid-November, from this November 10th low forward, the move up has been a lot choppier and uglier than we would typically want to see trend-like action exhibit. And while it's not required to be interpreted as being near the end of a move or topping action, that is generally where I see action similar to this unfold. And so that had me concerned, right? Not just last week, but prior to them, right? I had some concerns that we might be late in the move. And so really for a month or two, while I've still been bullish, I've been very cautious, cutting my time frame down, right, cutting my trade size down, because I've been worried about a steep decline. Now, that worry doesn't go away now that we've had the decline. But if this is in fact a 3-wave move to the downside, right, it does give me a good reason to think, as I said at the outset, that we have at least one more high because of the manner of this move down. Right? And once we do start to head up, if we head up, right, and make new all-time highs. I'm expecting that the advance won't be done until we can see that structure, the 1, 2, 3, 4, 5 wave structure within it, and then I'll allow for at least a pullback and maybe a reversal. Now, we could be well on the way there now. And even though I can't be sure that this just keeps going, or that this doesn't just keep going, once those objectives are met, I'm going to want to take a substantial amount of my profits for any longs that I put on between now and then. Right now, now Mike is saying that he's feeling bullish up to some of our fire lines. Those are voodoo lines, and Robert's asking, what are these levels on my charts? These are the voodoo lines. So there's a voodoo fire line up here in the S&P 500. Right? These are significant levels of support and resistance. These tree lines, less important, and even less important are these snow lines. Now you can see we got awfully close to that fire line before coming back down, found a snow line for support. And that's another reason holding that snow line to think that we do have potentially some more upside. So I agree with you, Mike. These are important levels, and I might want to lighten up a little bit if we get up there. But based on how I'm looking at this so far, we might get a little bit above there, or maybe even a lot above before we see a pullback. Now, there are a few different ways that things could go differently from what I'm talking about here. And so we should talk about that as well. Remember, I told you, we can never be sure from an Elliott wave perspective what's going on until after the fact. So all we're trying to do is stack the odds in our favor. And so it's worth talking about a few different possibilities. First, maybe this does go further down from last week's all-time high. One of the reasons to consider that as at least a reasonable possibility is, again, the fire line up here. We were right up against that voodoo fire line and started coming off. So what if instead of what we were talking about, this is a wave 1 down and a wave 2 up? Well, remember, we said after a wave 3 down, we can't come back above wave 1. So this is not wave 3. The only possible way that this is still going down as a trend move is if it's just the start and we've got a big or a smaller 5 wave move kind of within that third wave. The size of today's bounce makes me think that that's less likely, but I can't rule it out. So when could I rule it out? Well, certainly back above last Thursday's high. But that's still a decent amount up. Breaking a trend line down from the all-time high through last Thursday's high, that we've gotten closer to. And that also would warn if we gotten held above that level that we were continuing up. Otherwise, we just pay attention to the structure, the wave structure within this move up. So this is something I was tracking earlier in the day in case we do turn down. Again, the manner in which we came up looks mixed. There are elements of it that look more 5-wave like, some that look more 3-wave like. I think if we come down through this swing high we made right after the open today in the cash S&P and break it sharply, then I think we allow for a little more downside, perhaps with a larger high in place, but perhaps also just a deeper pullback. That is, these three-wave moves that I talk about. And I'm going to make this Elliott wave a little more complex for y'all, and I apologize about that. But these corrective moves, the counter-trend moves, can sometimes be a combination of multiple three-wave moves. So, look, if we got back through that high just after today's open sharply, then what we've got to do is pay attention on shorter time frames to the 5s and 3s. Does this go down in a way that feels like multiple three-wave moves and then turns back up again? Or does it fall apart more sharply? And so that's what I'll be paying attention to. What I've got right now, what I'm seeing right now, is advocating for higher, so long as those 5s and 3s remain consistent with what we're talking about. So long as this leg up from Friday's low continues to behave 5-wave like, as suggested by the fact that this move down appears to have behaved 3-wave like, right? And the same thing, if somehow we do break down instead and get below here, is that 5-wave like, or is that 3-wave like? So that's wrapping up piece number 1. Now, piece number 2 that we also have to talk about is this has not changed my overall sense of the market, that really for 2-3 months now, we have been advancing in a tired manner. And so even though I'm cautiously bullish right now, looking to buy pullbacks until these targets are achieved, so long as the elements that I mentioned that keep me bullish are in force, I don't want to overstay my welcome. I'm not, if I'm playing longs with options, I'm not buying leaps. I'm looking short-term higher, and I'm being cautious, and I'm still keeping size small, because nothing here suggests to me, if I zoom back out, that we're in the strong middle part of some of these moves. And while I could be wrong, I really do think that the upside here, while I still favor it, is likely to be limited. Now, these things can change at any moment, right? I update these charts all day long, and I keep watching to try and evaluate whether emerging price action is consistent with my view or potentially contradicts it. But for the moment, so long as it stays along the guidelines that I mentioned to you, I am looking at least, as I said, a little bit higher, but I don't want to overstay my welcome. If it just keeps going up, and I'll look for more pullbacks, and if they're corrective, join again later. That's what I think this environment suggests, and that's that's how I'm seeing the state of the market, at least in U.S. equities. Now, if you all have other things that you want to look at, boy, I would be happy to take a look at whatever is on your mind for the few minutes we have left. Another market that I'm keeping my eye on has been gold, and just continuing this idea that we've been talking about, right? The 5s and the 3s, trend moves, counter trend moves, right? The move down from the all-time high in gold, right, appears to be corrective, right? These are the 5s and the 3s, right? This looks like a 3-wave move down into September's low. 3-wave move down into November's low. Remember, I said sometimes we can get 2 of these, 2 3-wave moves. And sometimes we can get 3 3-wave moves, a triple correction. And so while I don't think that we're done to the downside yet, I think eventually we're heading back up to a new all-time high in gold. That is, if the move down from August has been corrective, then the trend is still up. When the trend is up, however, it should unfold as a 1, 2, 3, 4, 5 wave move. And this move from November, which, you know, in our futures trading room, we were long for a good chunk of this. Again, for the reason I just said, this move down looked corrective. But it didn't continue the way it should have if it was one of those 5 wave moves. And it should have been one of those 5 wave moves if the move up from here was going to continue to a new all-time high. And so that's what has me looking for at least one more move back down, whether that's from this little recent swing high here or a little higher bounce first. So for the moment, I like the long side, but I'm not even going to think about it unless or until we get back below that November low. And then if we start trying to turn up, I'll look at joining, or if the picture changes dramatically. So I like the upside in gold, but from lower, if that nuance isn't too much. So some questions about Bitcoin, and we can bring Bitcoin up here real quickly. I'm going to look at it on some other charts. I'm going to bring up my TradeStation charts to look at Bitcoin. So, you know, gun to my head, if we look at the move down from Bitcoin's all-time high, which is just a little above this Voodoo tree line at 41,095, you know, this looks more corrective, more 3-wave like than not into the area of this tree line down here at 28,396. So it's the extent of the bounce from this low that has the move down looking 3-wave like, well back above this first large swing on the move down. Now, the move up isn't terribly frisky yet either. So that might also mean that while this goes eventually higher, that it might either pull back more first or consolidate more first, perhaps into a triangle or some sort of wedge, right? But it looks like there is potential for more upside here. Yeah, and an investor channel is saying that there may be some intentional dumping in here to put things under pressure, and that's what you'll see in corrections, right? Corrections are where ownership changes hands, right? Where the strong trend influences aren't as present anymore, and bulls and bears are negotiating to see who's in charge. And so long as it leads to just consolidation in an area, whether that area is between here or expands modestly, this won't be true if it expands a lot. But if this is just folks quibbling, right? Bears take over for a few days, bulls take over for a few days, and it's just folks handing things back and forth, that doesn't do any damage to the trend. And at least for the moment, that's what looks like it could be going on here. So that's my best read. I'm not all that comfortable buying Bitcoin at these levels, as volatile as it is, right? But if I was, then certainly pullbacks within the uptrend, and we got a pretty decent one, right, since the start of the year. This is the spot to do it. The idea of an immediate turn back up is wrong right back here, but I'm not thrilled with the way this is taking off. So that's kind of the short view there. Young Bull is looking for some comments on Etsy, which had some nice moves last week. Let's see how it's looking more recently. And this is one where I have to get new Voodoo lines out because it broke up above our highest level of support slash resistance at 186.37. I am not going to think bearishly about this name unless it gets or holds below that 186.37 level. The only way to not like this chart is if you're not already in it, right? So pullbacks, at least so far, have been holding the 21 EMA on the daily. And I think so long as we continue to see that, right, unless it really breaks there and then breaks through that 186 level, I like the idea. Yeah, look, it long the 192 puts, they could still come good, right? Again, you know my opinion about the market in general being shaky, but until right, shaky is one thing, over is another, and I don't see any sign yet that things are done. Yeah, John, the Voodoo line calculations, it's a combination, right? So there's some manual analysis that goes into it, and then there is some automated pieces as well. So it is a hybrid. Square, Molly wants to look at, and this one, so it is trying to rehabilitate itself, right? So our moving averages are still mostly organized bullishly, closing back above the 21 EMA. You know, I was liking it when it was holding this this tree line up here. It wanted a lower tree line that it built a doji around. I like charts that that are cleaner, right? Certainly, if this is done to the downside, as rehabilitating itself might indicate, hey, that's well and good, and it might be a sign that this just really, pushes upwards, right? That this is the beach ball that's been held underwater by all this selling, and it's about to pop. But especially right now, I want to buy the things that are looking really really good, right? So question on Lee, which will be the last one that I hit before we wrap up, as we are getting close to out of time. And sometimes with these newer names, I'm not going to see as much. We're starting to get in a squeeze, and things are still organized bullishly. This might be an interesting name to see some follow through, especially if we get a couple more days of squeeze and then maybe get a buy signal off something like a ready aim fire. But for now, I don't see a setup for getting in other than the fact that it's mostly holding bullish moving averages and could keep going up. All right. So, and there was a quick question about the VIX. I'll go ahead and talk about that real quickly also, but then we will wrap up. So, look, this is a classic sell signal, right? We throw our Bollinger Bands on, sell the VIX signal, buy the market signal, right? We get closes outside of the upper Bollinger Band, and then we close back in. The selling on the VIX that we see here comes from a market selling off for several days, right? And sharply, and that's what's going to happen. And so, do I think this is a useful indication when combined with other things? Absolutely. But my primary tool is still going to be what we started off with, and that is the fives and the threes. The fives and the threes gave the warning that this move might be under pressure. The fives and the threes on short time frames gave us a good setup to sell into Friday's low and a warning to potentially cover. So with a move down like this, you're going to expect the VIX to pop, right? But it did what it needed to hold here. And the action in the VIX today, coming back in those Bollinger Bands, like we looked at, along, right after closing outside, is giving a similar suggestion if the classic setup comes together, right? How will we know? Well, I'm not going to watch the VIX to figure it out, right? The VIX is giving me a buy signal. Now I'm going to say, are my fives and threes on short time frames going to remain consistent with this idea of at least one more leg up? So that's what I've got, folks. Thank you, as always, for spending a little bit of time with me. We do rotate different traders from Simpler Trading at these State of the Market sessions, but I'm sure I will be back with you in a few weeks. And I know I recognize a few names from our trading room, so I'll see some of you there. Thanks, as always, for spending a little bit of time with me, and I will see you all again soon. Take care.